Let's kick off. Good morning, everybody, and welcome to the Daily Energy Markets Forum webinar, Monday, April the 19th. The months are flying by. Let's kick off, as always, with Omar Najia, Global Head of Derivatives, BB Energy, sitting in Dubai, watching the world. Omar, what does it look like this morning? Markets have opened in India with a little bit of a down move, but nothing too dramatic, sort of where they left off on Friday. You're on mute, Omar, sorry.
So there's not much that's going on. I think the crude market has moved down about 14 cents or so. US markets are, it's too early. Nothing's happening. The only interesting thing was Bitcoin moving lower over the weekend. But apart from that, I really can't see anything very much. And no change in kind of overall opinion on where oil is headed, or where the US equities are headed, or where Bitcoin is headed over time. So we need the markets to start moving, so to speak. The only other stuff I've been reading was the Iran deal, which is very interesting because they keep saying like progress and all this kind of stuff. If you read the Iranian press, they're saying they need the US to capitulate. It's also, when they did this thing about, destroying the centrifuges, they said it would take Iran 9 months, according to informed sources, whatever. I think it was like 2 days, 3 days later, they started enriching uranium to 60%. So if that doesn't focus the minds, I don't know what will. But let's see what happens.
It certainly focuses my mind. Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence. What Omar didn't mention there is that the infection rate in India, one of the world's largest countries, is going through the roof. The scale of the COVID pandemic resurgence there, I don't think anybody has any idea, because clearly there's no real view to the scale of the challenge that India is now facing, but it is significant. I think we can say that.
Yes, Sean, I appreciate some of the headlines I've seen this morning is copper's up because it's anticipating global economic recovery, and crude oil's down because it's anticipating a slower recovery than really we might be getting. So I think it's the opposite. What's happening is crude oil is an oversupplied market. Let's just look at OPEC spare capacity. It's about the highest ever, and the average is around 4 to 5 million barrels a day. It's just below 9. So we know what the problem is there. That's globally, that's an issue. I don't think demand's really going to come back the way it was before. And it's just being replaced by technology in the big picture. And we see that happening certainly here. But then I look at other commodities, copper, I see in the new economy, the world that's really going decarbonization, electrification. I can really see that kind of commodity continuing to appreciate. So I wrote a piece about that last week. One thing we should expect is copper to continue to outperform crude oil. Just think of ourselves 10 years from now. The proliferation of EVs is accelerating. So I don't see the demand really picking up. I see supply, no problem coming back on. US shales prove their supply is coming right back. So I think the thing for crude oil is the high is probably in for the year around 70. It maybe hovers around here. The biggest risk is if we have just a little bit of normalization in the stock market, say it goes down 10%. I'm not saying it will. Crude oil is going to drop 20 to 25%. So to me, that's where I see the energy markets. And I still see a much better focus for potential upside on metals. And I'm glad Omar mentioned Bitcoin, because Bitcoin's part of that innovation trend that's really kicking in. That's really bad for crude oil. I mean, there's more supply, we create more supply easily from technology, less demand, and Bitcoin's part of that innovation is basically replacing gold.
Rustin Edwards, Head of Fuel Oil Procurement, Euronav, sitting in Geneva. Rustin, it's kind of that challenge, the sort of glass half full, glass half empty this Monday morning. The India headlines clearly concerning, and then the flip side of that is we're seeing inventories continue to draw down. We've got Australia and New Zealand opening a travel bubble between those two countries. Japanese exports are rising to new records.
Well, I mean, I would put this in the fits and starts of getting into back to some type of level normality. I mean, yes, you have a travel bubble open up between Australia and New Zealand. That's great. However, then you have France canceling all domestic air travel inside of 2 hours voyage, which is negative. So, I mean, there is a yin and a yang to all of this. Part of France's strategy, of course, is towards more decarbonization and trying to put people on more ecologically sensitive transport, such as trains, which they have a very good infrastructure for, and they can actually meet the jet demand. It just means that you're going to lose about 400,000 barrels of jet demand going forward if France executes on that policy going ahead. I mean, the COVID cases, it is a tale of two sides. You've got the United States, you've got China doing very well. It's almost akin to like a car with a 6-cylinder engine. You got 3 of the 6 cylinders working. The other 3 aren't working so hot right now. India is definitely a trouble spot. You've got the EU still, in the quagmire of vaccines, Russia, US, which one are they going to go for? Are they going to be able to get enough out? Is production lines going to be able to ramp up to meet the demand needs? And then you got South America still in the grips of their COVID outbreak. And that's just probably just as bad as India's, but spread out over all the different countries there. So it is kind of a glass half full, glass half empty. You can focus on one side or the other, but for the net, I'm not very optimistic at the moment. I think it's going to be a long, drawn out recovery in demand for petroleum. It's not going to happen in Q3. I think it's more of a Q4, Q1 story, and I'm leaning more towards a Q1 story.
Omar, where are your thoughts at present regarding the discussion of inflation and what are its ramifications for the market? We've seen some headlines over the weekend, the UK house prices reaching new records, the same in the US, up 12%, and all of the commodities that are moving higher, feeding into upward movement in price of everything. Your thoughts on that?
Yeah, I think there's a general kind of fear of inflation, right? Because you keep hearing that, the Fed is printing and I don't know who else is printing, and printing means, more stacks of money.
I got my own money printing press. I just bought it on the weekend, ordered it from
Amazon.
Amazon delivered it. It's great. Everybody should get one. I highly recommend it.
Look, I don't think I'm not a fan of this kind of inflationary and Weimar Republic kind of thing. I really think that there will be I think what we have now is a fear of inflation. So I'm happy with that. But I think what dawns on the markets, I don't know when, is basically more of a deflationary environment, which is what we've had in the West for, I don't know how many years, at least since 2008. And I don't think that's going to change. However much money, quote unquote, you print, and however much you try and stimulate demand, and all the rest of it. And I think basically to do with the electrical vehicles and all that kind of stuff, that's very much kind of a Western, US and European. People who have money can afford to buy a Tesla or whatever it is, but you try selling your electric vehicle down in Africa or in India, and you see how far you get, basically. So oil is cheap. Oil will continue to be cheap. Hydrocarbons, coal, all that kind of stuff. You need to generate electricity somehow. And the cheapest way to do that right now is hydrocarbons. Maybe if we have
Yeah, I was just going to jump in and say, I mean, if you take the long view on oil price and that, inflation, okay, the Fed says it's not here now, but I think there's more or less a consensus that it is coming, whether it's only fear at the moment. Where does that start to impact the potential outlook for the oil price, or does it have any consequence, let's say next year, if inflation does surpass the allowable level and so rates rise?
So basically, inflation just means that, to have real inflation, you need wages to go up, right? And that's what we saw, I think, with Amazon, trying to keep a lid on that kind of stuff. That's why I think inflation, you're not going to see it. You need basically wage inflation. You need unification. And that's what I think the big digital kind of companies fight very well against. So I don't think we're going to see this kind of, inflation everywhere. But if you look at it, everything, any commodity is a quote unquote hedge against inflation. Same with property, so real assets, and the same so real assets. You want to be basically in real assets, which is why I think you're seeing all this kind of property prices, commodities, all that kind of stuff move to the upside. Fear of inflation, but again, I think to get real inflation is something totally different.
So Sean, can I chime in on this one real quick?
Yeah.
Because I'll be publishing in a few hours. And my headline is going to be, this may be the most deflationary period in history. And Omar mentioned a touchdown, which just look at crude oil. The WTI price is the same price it was in 2005, yet US M2 money supply is up almost 200% over that period. So what's happening, I think, is what we're all seeing is everything's being replaced by technology. And the fact that this most significant commodity on the planet is the same price as 16 years ago, yet the amount of money that's used to price in is doubling in value, is tripling. And the amount that's there is a deflationary period. So I think when people criticize central banks, they're missing something that we're going to look back from the future, is just because we're in that rapid stage of technology kicking over, which is why I cannot be bullish crude oil, because I see it here. I see it with all my colleagues. No one's coming back to the office. They can easily do Zoom. They're not hopping on airplanes anymore. And anywhere before we had an issue with crude oil, incremental demand was not kicking in. Like even let's look at airplanes. Your average person is not going to just hop on an airplane like they used to and do 5 meetings in Europe, which I used to do 5 meetings a day. They're going to do them on Zoom first and travel second. So the world's changed and the technology is accelerating. So that's why I have to be bullish the metals. I'm bullish Bitcoin. I cannot be bullish fossil fuels because I feel they're being replaced. They're going to be like whale oil was 100 years ago. They're rapidly being replaced. Yes, we still need them. Very important. Omar pointed it out. But I mean, I drive an electric car, and when I bought it was $36,000. It's a poor man's Tesla. It's a Volt. And now that price of that car in 5 years, according to Kathy Woods, is going to be half the cost just because of batteries.
Rustin, meanwhile, back at the ranch, we're seeing inventories decline quite significantly on a steady. We had Jorge from formerly of Platts on last week saying that we're looking at 3 million barrels a day, and we could drop below this 5-year average target for OPEC plus. The real drawdown, should we be seeing more supply, do you think, as we move forward?
Well, I think the factor of more supply coming in is more just the economic pressure on a lot of producer nations. I mean, there is not a need for the extra crude in the market. I mean, when you think of the refinery runs currently being promulgated around the world and the actual demand for products, it's a fairly balanced equation at the moment. As soon as you start, I mean, we'll see here in May when the incremental 750,000 barrels come back from OPEC, how does the market actually react, and can the market absorb it? My theory is I'd probably see some of that go into a strategic reserve holding versus actually run into increased refinery runs. So have we drawn down stocks? Yes, we have. I mean, I think we've hit the happy balance at the moment, and we actually need to see real consumer demand coming back in all regions. I mean, the United States, things are looking good there. Rack sales are up across the board. In some cases, it's up above back in 2019 levels on gasoline sales in certain regions of the United States, mainly in the South, which you kind of expect that with the quote unquote opening of the economies there. But you look here in Europe, consumer demand is not that great for petroleum products at the moment. Diesel had a bit of a resurgence here last week with the spat of cold weather that we had rolling in. I mean, we actually had snow in Geneva back on last Monday. And
London as well, apparently.
And London as well, yes. And so now we're looking at 20 degrees, 22 degrees here going into this next week. So
you'll be swimming in Lake Geneva this afternoon.
No, I don't think I'm going to be doing that one. No, it's still a bit on the cold side. But
Rustin, on the point of inflation, which we were talking about earlier, was some of the early signs we saw of that was in shipping, containers lost all over the world and so forth. Where are we at the moment with shipping costs, container costs?
Container ship freight is still robust and strong. I mean, it has not diminished. It does take time, and the Suez Canal issue, even though that was only there for about a week, still exacerbated that whole problem because you have a bunch of ships showing up in a singular port, going to offload all their goods at the same time or relatively around the same time, and then wait for the boxes to come back so they can move them back to where they need to go for refilling. So container freight is actually still fairly strong. Dry bulk freight is still moving very good, which kind of pulls into what Mike and Omar have been saying around raw materials of copper and other base metals that you need to produce the electronics that move forward to the new economy. Tanker freight, that's still in the doghouse. It hasn't come back. I mean, and again, I don't think it comes back at all unless you see a major rapprochement from Iran and the United States to allow Iran to freely trade oil versus how they're currently trading today. So when that does happen, you'll see a recovery in tanker freight. But right now, tanker freight is not so hot.
Omar, on the technicals, where are we at? We got WTI trading at around 63. Where are we at in resistance or acceleration at the moment? I don't know if you're on. Yeah, you're on mute, Omar. You're muting yourself today, man.
So we look,
self-censorship. Don't do it.
The market. If you look, last week we had this kind of sideways trading pattern, which we broke to the upside. So, is it possible the correction is over? Yes, but really, you really need to move above this high at 67.97. I think the market does it. I think the market goes considerably higher from where it is right now. So yeah, I'm basically bullish WTI. If the market falls, you'd really need to break that 57.25 low that we had a couple of weeks ago, basically, and then
I mean, any of the drops below 60 haven't stayed there very long on WTI.
Look, I mean, I get the basic idea about economic transition and energy transition and all this kind of stuff. And I get that 5 years ago the price was the same as today, or 10 years ago, whatever. Oil is not a commodity that basically has a lot of quote unquote price discovery, right? It's managed by OPEC. It's managed even more by the US and the Fed. There's a lot of arm twisting and all the rest of it. And yeah, it has, fundamentals play a part, supply and demand and all that kind of stuff. But like any market, the fundamental thing that I focus on is OPEC. Everybody's is saying the same thing. You're gone, you're dead. 5 years, 10 years, 50 years, whatever it is, you're going to be zero, blah, blah, blah. And I put myself in OPEC's position. If somebody's telling me that basically I'll be obsolete in 5, 10, 50, whatever years, do I maximize the money that I make now by quote unquote managing the market, or do I basically pump full and make a pittance before I go bankrupt and belly up? And you have to remember also that most of these OPEC countries, or the big ones, are not exactly democracies, right? So you're talking about, families or whatever you want to call it. So you add all that to the mix, and you add the fact that, hydrocarbons are the cheapest energy source, most movable, most whatever you want to call it. They have massive infrastructure behind them, from gas stations to everything else. And I just don't buy it's happening tomorrow. Maybe.
Well, it certainly has little impact on the front month, doesn't it?
Yeah.
Mike, if I had a penny for every time I read a story over the last few days about the disruption to microchips, I think it must rival inflation as one of the stories out there in the world at the moment. But it does seem like a serious problem. It's popping up everywhere. Microchips are in everything, and there's generally not enough of them. Anything there to be keeping an eye on, do you think?
So I guess I think the key thing to take away from that is, and Omar touched on it well, it's big picture versus the smaller in your face. It's part of what's this massive shift towards advancing technology. And there's the old mantra, first it's gradually and then kicks in suddenly. It's kicking in suddenly. And this is mostly here. The issue is in automobiles. Your average automobile it's so much more efficient, and every single manufacturer on the planet is vowed to shift towards electric because they all know where the costs are coming. Yes, so I get the big picture is very bearish to crude oil. Short term doesn't matter as much, but to me, this is a key thing I see happening, and that's where it's all bullish for copper and silver. So like copper's up 2% today, and there's no key headline because it's a bull market. It's fundamentally technically sound. It's probably going to break above that $10,000 level by the end of this year. Crude oil getting above the all-time highs is almost inconceivable. So to me, that's the shift that's kicking in. And it's happening more suddenly. We're in the suddenly stage now. That's why I look at the microchips thing, because it's just how technology's taken over. Autonomous cars are coming. This next 10 years is going to happen a lot faster than the last 20 years.
Well, apparently the first autonomous cars are going to be here in Dubai, according to announcements over the weekend. But I do note on the issue with the microchips shortage, I think it's also worth noting that 70% of the world's microchips are made in Taiwan. And I don't think it's just a coincidence that we're having a lot of stress around Taiwan at the moment. I do think there are connection points there, and that's why it's worth keeping an eye on that story. Let's go to the room and let them have a view on things this morning. Hong Kong will suspend flights from India, Pakistan, and the Philippines from April 20th due to imported coronavirus infections. Ireland has said they will only recognize vaccines approved by the European Medical Association. Everybody else, you got to stay in a hotel for 2 weeks. Will the inconsistent recovery dull the bull market that is clearly underway across all assets? Let's get your views on that. Rustin, looking out for the week ahead as we kicked off this morning, prices on crude a little down. Where do you think the market could get direction from this week? Continued equity results?
Well, either on the equity results, or we'll get more inventory data that comes out and see exactly how well refinery recovery is going. I mean, I've always been a key focus on refinery margin and refinery operation levels, because that.
And we have a big surge of refinery capacity coming back.
That we do. And so if the world can contain all that product and we don't see further erosion in the distillate spreads and the distillate cracks, then happy days. I mean, the one positive thing is with gasoline margins moving higher, it does give a lot of the distillate molecule a home into secondary processing, which could help alleviate some of the supply issues there. But still keep an eye on the rack sales, and hopefully we get some more direction here in Europe on vaccines and recovery. Because we need to get those other cylinders firing.
I mean, there does seem to be mixed signals out of Europe, Rustin, in the sense that they seem to be getting the vaccine process, the rollout under control, but at the same token, dealing with accelerated infections.
Yes, I mean, and our vaccine rollouts haven't been as well as they should have been. I mean, one of the things about the statements from Ireland is that it's a bit troublesome to see that we're going to start nationalizing or picking a winner when it comes to vaccines as to who can travel and what can do what. I mean, the Sputnik 5 vaccine, not approved by the European regulators, but you do have a lot of Eastern European countries and, San Marino, which a small little European republic that's non-part of the EU, have gone to Russia to get vaccine supplies to vaccinate their populations, because the Pfizer and Moderna supply lines haven't been able to meet the demand. I mean, we've stagnated here in Switzerland because they don't have enough vaccine supplies to meet the plans that the government put in place. Myself, my window has now been shifted to July when initially it was in May. So, I mean, just that type of degradation on vaccine rollout will impact demand. And that's why I'm still very bearish on overall recovery demand until probably Q4, Q1.
It's perhaps another summer of staycations. Omar, the week ahead, obviously you mentioned earlier the Iran talks. Are they going to arrive at a place in which there's a rapprochement? Your thoughts on that, as well as, does it matter for oil markets, oil price direction, where the US and Iran go at this point?
Look, I think it'll be interesting to see. I think basically the US needs an agreement and Iran wants one. How the Americans present it when they basically need to cave in and do everything Iran wants, that's going to be very interesting to see. But bottom line is, if you try and basically destroy some of these centrifuges, and they come back a couple of days later and say we're enriching it to 60% and we're making 9 grams a day, in your face, basically you come to a deal. The effect
there was another story over the weekend, Omar, just to interrupt, that Saudi and Iran apparently meeting quietly in Baghdad and looking at their own direct face-to-face talks, if indeed those reports are accurate from the news agencies.
Yeah, I mean, again, Iran's been wanting to have direct talks with Riyadh for quite a long time. The situation in Yemen is deteriorating by the day. The drone attacks on Saudi are, getting worse by the day, et cetera, et cetera, et cetera. So does it surprise me? No. Effect on the oil market of Iran coming back, it's not going to be bullish, but I think basically they folded into the cuts that they have. Again, I'm not saying that the oil market is bullish as it is. In the same way as the U.S. equity market isn't bullish as it is, but if you add the Fed to the U.S. equity market and you add OPEC plus to the oil market, then is it bullish? And my answer is yes.
Well, the Iran story could be strangely bullish in the sense that if they come inside the OPEC plus agreement and are not a random outlier, you might have a better window on their production and supply to the market, which might be a more comfortable position for the market, because it's the inability to see what they're doing that perhaps creates some unknowns. Let's go to the survey result and give Mike last word from New York today. Will inconsistent recovery dull the bull market? There's certainly an overwhelming view in this room that it will. Mike, your thoughts week ahead? Where is U.S. politics at the moment? We're coming up to 100 days with His Royal Highness Joe Biden from Delaware. Has he got a gold star for his first 100 days?
He does. He does. One thing that's really clearly happening here is the vaccine rollout. The getting back to normal potential is happening rapidly. People will never drive like they have in the past. And I rarely say never, but there's been a major shift. That's part of the reason Omar and I make a good market. I think WTI crude oil is more likely to go 50 than to 70. And the biggest risk is just a little bit of normalization in the stock market, and crude oil is going to collapse, and not collapse, go back to that mean. That's a 5-year mean, $50. And I think the trend in interest rates is still lower, and buy metals, because metals are probably more likely to go up, and typically they're better investment. You don't have to deal with contango as much.
Does Biden have the political capital and support to push through another one of these major spending bills?
Oh yeah, he's got the carte blanche for now. He's got both houses. He's got completely, and it's very prudent. I mean, he can borrow for next to nothing and invest in infrastructure. To me, that's the right thing to do. And he can continue to do it. So does he have
Joe Manchin from West Virginia?
Well, who knows? I don't know about that, but he can do what he wants right now. And until we get to the midterms, which are still almost 2 years away, it's his prudent thing to do is just take advantage of it, because midterms usually push back a little.
Yeah, it will be interesting to see where that goes, and as he continues to have a clear run, one would think be supportive to the markets. Well, let's wrap it up there. Kickoff Monday morning, April 19th. Oil markets a little bit down, but not really moving anywhere. Maybe looking for direction, and direction may come this week. Early comments out of OPEC ahead of their next meeting, continued equity results, delivering record profits for all the big companies. That may be the kind of oxygen that takes this market to $70. We'll have to see. But thank you, Omar, as always, sitting in Dubai, Rustin in Geneva, Mike in New York. Really appreciate your insights this morning. Thanks, everybody. Catch up with you during the week. All the best.
Have a good day, everybody.
Cheers.
Thank you. Bye.